The gap between the wealthy and everyone else isn't just about income, it's about the consistent asset classes that drive actual wealth accumulation. While most investors stick to traditional savings accounts and basic retirement funds, the financial elite builds fortunes through 5 specific wealth-building assets, requiring higher capital thresholds, greater risk tolerance, and deeper market understanding. If you're invested in these 5 wealth-building assets, you're in the financial elite tier. 1. Building business equity, the ultimate wealth multiplier that separates the elite from everyone else. Business equity represents ownership stakes in private companies, and the statistics reveal its importance in wealth building. Approximately 40% of those in the top wealth decile hold business equity, compared to just 2.5% in the bottom decile. This dramatic difference highlights why business ownership remains the most reliable path to substantial wealth creation. Unlike publicly traded stocks, business equity controls operations, strategic decisions, and profit distribution. Owners can reinvest earnings for growth, optimize tax strategies through business deductions, and build valuable assets that generate income and appreciation. The wealth multiplication potential stems from the ability to leverage other people's time, money, and resources while maintaining ownership of the underlying value created. The barriers to business ownership explain its exclusivity among the financial elite. Starting or acquiring a business typically requires significant capital, industry expertise, and the ability to manage substantial risk. Many wealthy individuals build businesses from scratch, acquire existing operations, or purchase equity stakes in promising ventures. This asset class demands active involvement and a sophisticated understanding of market dynamics, which naturally limits participation to those with the resources and knowledge to succeed. Business equity also offers unique tax advantages unavailable to traditional investors. Business owners can deduct operational expenses, depreciate assets, and potentially qualify for favorable capital gains treatment upon sale. These tax benefits and the potential for exponential growth make business equity a cornerstone of elite wealth-building strategies. Number 2, buying private equity and venture capital, high-risk, high-reward investments for the sophisticated investor. Private equity and venture capital investments represent another exclusive domain of the financial elite, with wealthy investors typically allocating around 6% of their portfolios to these alternative assets. These investments involve funding private companies or startups with exceptional growth potential, offering the possibility of substantial returns that far exceed traditional market investments. Private equity focuses on acquiring established companies, improving their operations, and selling them at higher valuations. Venture capital targets early-stage startups with disruptive potential, providing funding in exchange for equity. Both strategies require significant minimum investments, often at several $100,000, and are typically restricted to accredited investors meeting specific income and net worth requirements. The appeal of these investments lies in their potential for extraordinary returns. While public markets might deliver average annual returns of 8 to 10, successful private equity and venture capital investments can generate returns of 20% or higher annually. However, these investments also carry substantial risks, including complete loss of capital, illiquidity for extended periods, and dependence on management teams and market conditions beyond investor control. The exclusivity of private equity and venture capital extends beyond capital requirements to include the sophisticated due diligence process. Before committing funds, investors must evaluate business models, management teams, market opportunities, and competitive landscapes. This level of analysis requires expertise, networks, and resources that most individual investors don't possess. Point 3. Precious metals and alternative assets, your hedge against economic uncertainty. Precious metals and alternative stores of value represent a sophisticated approach to wealth preservation favored by the financial elite. Gold, silver, and digital assets like Bitcoin are hedges against inflation, currency devaluation, and economic uncertainty. These assets demonstrate a level of portfolio sophistication that goes beyond traditional stocks and bonds. Gold has historically maintained its purchasing power during economic turmoil and high inflation. During the 1970s inflation crisis, gold prices increased dramatically while traditional investments struggled. This protective quality makes precious metals attractive to wealthy investors seeking to preserve wealth across economic cycles. Integrating digital assets like Bitcoin into portfolios represents a modern evolution of alternative store of value investing. While highly volatile, Bitcoin has attracted institutional and high net worth investors as a potential hedge against monetary debasement and technological disruption. However, these investments require careful position sizing and risk management due to their extreme volatility. Elite investors typically allocate a modest percentage of their portfolios to precious metals and alternative assets, recognizing their role as insurance rather than primary growth vehicles. The key lies in strategic allocation rather than speculative trading, treating these assets as long-term wealth preservation tools rather than get-rich-quick schemes. 4. Low-cost index funds, the deceptively simple foundation of elite portfolios. Contrary to popular belief, the financial elite extensively uses low-cost index funds as foundational portfolio components. These seemingly simple investments offer broad market exposure, instant diversification, and minimal fees, making them powerful wealth-building tools when used consistently over time. The power of index fund investing lies in compound returns and cost efficiency. Historical market returns demonstrate the wealth-building potential of consistent, long-term investing in diversified market indexes. The S&P 500 has delivered positive returns over every 20-year period, making index funds reliable for wealth accumulation. Cost efficiency sets elite investors apart from average investors, who often pay excessive fees for actively managed funds. Elite investors understand that minimizing costs maximizes long-term returns. Even seemingly minor differences in expense ratios compound significantly over decades, making low-cost index funds preferred vehicles for building substantial wealth. The discipline required for successful index fund investing aligns with elite investment principles. Wealthy investors resist the temptation to time markets or chase performance, instead maintaining consistent investment schedules regardless of market conditions. His behavioral discipline, combined with the mathematical power of compound returns, creates substantial wealth over time. 5. Investment real estate. Building generational wealth through property ownership investment. Real estate provides the financial elite with wealth preservation and creation opportunities. Whether through primary residence equity or rental property ownership, real estate offers unique advantages including cash flow generation, appreciation potential, tax benefits, and leverage opportunities. Rental properties generate monthly cash flow, while potentially appreciating over time. This dual benefit allows elite investors to build wealth through income and capital appreciation. Property ownership protects inflation, as rental income and property values typically increase with general price levels. Real estate offers exceptional tax advantages unavailable in other asset classes. Property rental owners can deduct mortgage interest, property taxes, maintenance expenses, and depreciation while potentially deferring capital gains through like-kind exchanges. These tax benefits significantly enhance after-tax returns compared to traditional investments. The leverage opportunities in real estate allow elite investors to control valuable assets with relatively small down payments. This amplifies returns on invested capital while providing potential tax deductions for mortgage interest. However, leverage also increases risk, requiring a sophisticated understanding of market cycles and cash flow management. Conclusion: these 5 wealth-building assets distinguish between the financial elite and average investors. Business equity, private equity and venture capital, precious metals and alternatives, low-cost index funds, and investment real estate require different capital, sophistication, and risk tolerance. The common thread connecting these assets is their ability to generate superior long-term returns while providing diversification benefits unavailable through traditional investment approaches. Building wealth through these asset classes requires patience, capital, and financial sophistication. but they represent the proven foundation of elite wealth accumulation strategies.
Wealth Building Secrets: 5 Elite Assets Revealed. Thank you for watching. Come back for more.